Welcome back to my channel where I educate you on tax and business strategies so you can keep more of the money you make, pay less to Uncle Sam, and build wealth in your business and your investments. My name is Keisha Rondino, your real estate and business CPA, and today we are going to discuss the Corporate Transparency Act and the Beneficial Ownership Identification Report. So the Corporate Transparency Act, it was actually initially enacted in 2021, but it did not take effect until January 1st of 2024. And within this act, it requires many companies, including corporations and LLCs and other business entities that do business in the United States, to report information about the individuals that control or own them. And so that information is included in what's called the Beneficial Ownership Identification Report, which is also known as the BOI Report. And so the information that is included in that report helps law enforcement agencies and financial institutions. And so it is not a public report. It is a report that is only used for government entities. So why now do these businesses have to file these reports? Well, the government law enforcement and other security agencies, they're going to use the data in the BOI report in order to track and tackle crimes. And so specifically, money laundering, tax evasion, terrorism, and other crimes that comes with running a business. And so they believe by completing these reports and having this information, this is going to help them track down any criminal activity that may be taking place within a business. So what businesses needs to file this report? And so there's a long list of information when it comes to who needs to file, but generally small corporations and LLCs and other business entities are considered to be what's called reportable companies. If you are a reportable company, then yes, you will be required to file the report. Now, an exemption to that would be a company that is considered to be a large company. So those are companies that have 20 or more employees and they generate more than $5 million in US sourced income. And that is verifiable through prior year tax returns. So if on a prior year tax return, it shows that you had 20 or more employees and you generated more than $5,000 in US income, then your company would not be a reportable company and you would be exempt from having to file this report. But other companies will be required to do so. So, like I say, generally it is small corporations as well as LLCs and other different types of companies that will be required to file this report as a reportable company. So where are you going to file this report? So this report is filed online through a new reporting system, which is the BOSS system. So that is the Beneficial Ownership Secure System. And that is the system that is going to track and house all of the submissions for the BOI report. There's no filing fee that is associated with it. And the information within that system is only used by the IRS for law enforcement, financial institutions, and other government agencies. It will not be disclosed to the public. So you can be assured that your information is going to be secure when it is submitted through the BOSS system. So when you do file that report, the type of information that is going to be requested is basically going to be for the structure of the business as well as the owners of the business. And so someone would be considered an owner or a beneficiary owner if you own 25% of the business or if an owner exercises substantial control over the business. They are considered to be beneficiary owners, and their information is what's going to be reported on the BOI report. And so it's usually their name, their birth date, their address, and other information that does apply to them, as well as their percentage of ownership, the nature of their control, the explanation of their ownership structure and how they control, and just other information that is relevant to the beneficiary owners. So when does this report has to be filed? Well, if your business was formed as of December 31st of 2023, then you have until December 31st of 2024 in order to file your BOI report. So that gives you a year to do that. If you form an entity on January 1st of 2024 or afterwards, then you will have 90 days from when that business is formed in order to file that report. Now, once the initial report is filed, if there is any change to the ownership or changes to the information for those that own the company, that has to be reported in the BOSS system within 30 days of the change. Filing this report is mandatory. If you do not abide by it, you may subject yourself to penalties of $500 per day, up to $10,000, or even jail time for not complying with this regulation. And so you need to determine who is going to fill out the report for your business. Is it going to be you? Is it going to be one of the other owners? Is it going to be your CPA or your attorney? It is important to determine how it is going to be filed because you don't want this to slip through the cracks and then it is never done. There you have it. That is my breakdown of the Corporate Transparency Act and the BOI report. I hope that you found this information helpful in understanding the implications of the legislation and what needs to be done. As always, don't forget to like, subscribe, and share this video with other business owners and investors so they can be in the know. Thank you for watching, and until next time, stay informed and stay ahead in the business and investment world. See you in the next video.